Good morning, good afternoon, and good evening. I'm Diana, and I am the Head of Research and Sustainability at the Global Blockchain Business Council. It's my pleasure today to welcome you to GBBC's Virtual Members Forum on Navigating the Financial Promotion Regime for Crypto Assets. We are a biweekly webinar showcasing the innovative work of our members around the world. Today, we're joined by Michael Johnson, Head of Compliance at Zumo. Zumo is a GBBC member, and it is a business-to-business digital assets infrastructure engineered with a focus on compliance and sustainability. It enables financial institutions and enterprises to effortlessly embed digital assets via a simple API and unlock the potential of their brand with Web3. Just briefly, before we begin, I would also like to introduce Michael. Michael is a highly accomplished compliance manager with 25 years of experience in the financial services arena. He joined Zumo in 2021 and has been the driving force behind the company's award-winning compliance-first approach. Under Michael's guidance, Zumo has participated in the FCA's crypto sprints and engaged with the trade association's consultation responses to help inform the regulator of what works for both consumers and the burgeoning digital assets industry. Michael has successfully navigated Zumo through regulatory requirements, including the tech-based requirements of the FCA's new financial promotions regime for crypto asset firms, which took effect recently in October of 2023. Michael has been a professional member of the International Compliance Association since obtaining his diploma in compliance in 2010. His experience lies within compliance advisory and reporting, generally related to FCA consumer credit requirements, data protection and GDPR, anti-money laundering, corporate governance, regulatory engagement, operational risk, and operational incident management. During this session today, Michael will provide a comprehensive understanding of the UK Financial Conduct Authority's financial promotions regime and its implications today. In this presentation, Michael will share practical insights for maintaining compliance in the UK and developing business models that meet regulatory standards. We welcome your questions at any point during today's presentation, so please submit them in the Q&A tab at the bottom of your Zoom screen, and we will take them after the presentation. So thank you, Michael, for joining us, and I will now hand things over to you.
Thank you, Diana. It's good to be here. Hopefully this will be of use to some or many of you in the crypto asset space that perhaps an unregistered firms working from further afield in the UK. So yeah, what we're talking about here is the financial promotions regime that came into play, I was going to say earlier this month, but we're now in November, so earlier last month. And we'll just navigate through that process. So really what we're looking to sort of focus on is this is a very sort of brief agenda. We'll look over the requirements that the financial promotion regime brings in. We'll look at some of the practical insights in terms of how to actually get to that level of compliance, and also consider some strategies that are available to yourselves. Some you may already be familiar with, but it's also having a look at what we believe is the sort of the full suite of options to some degree. So without further ado, let's actually look at what's the purpose for the financial promotions regime. So if we just focus on this a second, you know, it's a really interesting, fascinating place that we're at the moment. The idea behind this financial promotions regime, which I'll call out at this point, isn't specific to crypto assets. It's been around for a good long while, relating to other types of investments, and it's the means and ways that the regulatory bodies want to ensure that the message going out to UK retail customers, so customers who are based in the UK, understand actually what they're getting involved in. What is that investment? Are the promotions fair? Are they clear? And are they not misleading? Are the key things there? But it's also looking at that whole communication chain of events behind that. It's not just simply a marketing piece here that we're looking at. It's looking at a wider piece, and the threshold is very, very low before you suddenly find yourself in the domain of the financial promotions regime in terms of any interactivity relating to crypto assets. So in the beginning, let's look at it. Why do we actually need it? What drove this? So these are just some wee snapshots. I wasn't involved in crypto assets as back in the day of Mt. Gox, but Mt. Gox was kind of up there and then it wasn't. It was a big player. There was a wee hack. I say wee hack. But monies were taken out of people's accounts, and all of a sudden they didn't have what they believed they were going to have in terms of their assets sitting securely within Mt. Gox. So it's the idea of financial promotions is to really respond to events like that, to respond to really social media influence as well. So what I mean by that is the ability to affect other people's thinking in any social online type community. Now that could be promoting, in many cases, good services, good products, but dubious investments, rug pulls, just outright scams. Because what you're focusing in on here, what these people are focusing in on is people's insecurity, people's want to make that kind of quick buck and sort of go forward. So that's where that's really the beginnings of what's driven the need to have a financial promotions regime affecting crypto assets. And the idea behind it, the big driver, is really consumer protection. It's all about, from an FCA perspective, it's all about putting the consumer first. And this is an FCA supervised activity. So in respect to financial promotion, so we need to be aware of it. Now, I put some stats up here. They're actually quite dated stats now. They relate to the FCA Financial Live survey that was performed in 2022. They had done one previously. I'm sure they'll do another one in the future. But the key figures here on screen, you can see there's nigh on 50, every other person within the UK, according to these stats, shows some form of characteristic of vulnerability. And that doesn't mean that they are vulnerable in their own right, but it means they are more susceptible to becoming vulnerable. So that's 24 million people, 24 million potential customers are out there who are potentially vulnerable. And then looking at the other figures there, what does that actually mean? Low financial resilience. You know, we're talking about people buying crypto. The regulator, governments look at it and go, well, can these people afford to buy the crypto in the first place? And this is what part of this is about. So they're looking at low financial resilience. They're looking at people that are potentially over indebted and those that are actually in financial difficulty. They're trying to protect these. You know, we add to that mix, as I mentioned, that kind of quick buck. They want to make money with perceived or little perceived effort. That's why so many people, in my view, get involved in the lottery. You know, it's however much it is. It differs for different lotteries, and there's an opportunity to get a load of money back. But realistically, what's the chances of you actually getting that? And it's about that, again, reflecting on that social media or influencing. People follow those that they like, and if somebody's into a particular currency, oh, hey, they think it's good, then it must be good. Let's go down that route. It's a fear of missing out, the old FOMO that we all like to talk about. And clearly, what's not happened in the past is that the old adages that they've been unsuccessful. So if it, you know, if it looks too good to be true, it probably is. Do your own research. People don't want to; they just want to go for that as little effort as possible. And you know, even where sites have put on their or firms have put on their websites, investing in crypto is risky, prices are volatile. It's the perception here is it's not been enough, and there needs to be more consumer protection. So that's really the key driver behind this. And that's really how we've ended up where we are. It's delivering the biggest impact in the quickest time. Welcome to FSMA and welcome to financial promotions regime. It really, really makes it harder for crypto asset firms to promote crypto trading, whether that's crypto firms that are registered within the UK or firms who aren't unregistered and are working from further afield. It makes it harder for people to get involved in impulse buying. Oh, look at that, such and such is involved in that. I want to go down that. It's a positive friction. And we'll come on to positive frictions a little bit later on. Those susceptible people, those vulnerable people for different reasons, it makes it harder for them to be able to buy at all. It makes it harder for volatile or risky tokens to become available. And going back to that social media and the influencers or finfluencers, and I'll add other third parties, it makes it harder for them to actually make a quick gain, potentially at the detriment of the general consumer in the marketplace for looking for crypto investments. So that's why it's here. But what actually changed within the context of this? Well, it's probably worthwhile just reflecting a little bit on some of the definitions and, jumping ahead here, we'll leave that up. It's looking at some of the definitions and just understanding a little bit some of the language that gets used within the FCA handbook. So there are rules. I mentioned that financial promotions, it's not new. It's been about for a long time. It has changed over the years, and it's only now that crypto assets are falling into the scope of the financial promotions regime. And crypto assets are being defined as restricted mass market investments. So it's quite similar to the peer-to-peer market from that perspective. It's the same bracket that we're in. And this is important because it actually drives the level of rules, the type of rules that are applicable to crypto assets versus some other form of investment that may have a lesser, considered a lesser risk investment. So we need to look at that. We need to be aware of that. That's really one of the key drivers, and it's worth understanding that piece. The FCA describes financial promotion, which is what we're talking about here, in two different ways. I like to look at the second one because I think it's more open to interpretation. So I'll focus on that one rather than looking at them both. They're there for you to read. But it's an invitation to any person who responds to the communication to make an offer to the firm or another person to enter into a controlled agreement, and specifies the manner of response or includes a form by which any response may be made. The "and" is important, but it's also the individual aspects of that. So if we're talking about a person, who are we actually talking about? Well, we're talking about individuals, clearly, retail customers. But it also incorporates, and it is worth noticing for those firms that do business to business activity, that it will likely include sole traders and partnerships as well. Much the same as it is for other areas within the FCA remit. So don't just think of a person as being an individual, a me or a you, but also consider it is actually some business activity as well. And that's worth keeping it at the back of your mind when you're looking at the whole financial promotions regime. It talks about an invitation, and I like to reflect on that word invitation, or another word, similar word that gets used within the policies, within the guidance, is inducement. It's really, really open to interpretation, and it's the dictionary definition that is actually used for that. So an invitation is an action that causes or encourages something to happen. That's it. But that covers a whole breadth of activity, a whole breadth of social media, a whole breadth of information on a website. Really, really easy as that low threshold of getting caught up in this. It's to make an offer. It's not actually being involved in that offer at that point in time, and that execution. It's the process before that, to get into an agreement to purchase crypto from either a fiat base or from another crypto. So very, very broad brush look at this, an approach to it, and it's intended, and the FCA have said that it's intended, and that's how they look at it as well. So don't think that it's just a market, a marketing promotion of, for a particular crypto asset on a particular case in one specific location. It covers so much. It covers adverts placed in print, not that we really do with print these days that much, broadcasts, online media, brochures, emails, websites, social medias, posts in their own right as well. And it's all about the rules for a firm's channel of communication, whatever that communication is, with their UK retail customers that precede an option to buy crypto assets. Not to sell, but to buy crypto assets. It's all about the vulnerability for the consumers and protecting them. The really, really key thing for unregistered firms who aren't within the UK is it's set up to be extraterritorial jurisdiction, which essentially means even if you are offering an exchange service in, pick a country, we'll go with Spain, that UK customers can access and potentially buy crypto assets through, even though that's not your market, not your planned market, and you might want to rely on reverse solicitation, you're actually, unless you are implicitly saying it's not for you UK customers and you're preventing them from going on board, you're actually getting caught up within the scope of the UK's financial promotions regime. And that's really, really important. So I mentioned positive frictions earlier on. There are more than one. So it's worth us looking at this. This diagram comes from the FCA policy statement. And this was actually pre-crypto asset policy being defined. You can see there's one line actually scored out there because it doesn't fit the crypto asset regime. We're not permitted to use that one. I don't want to focus on it, but it just kind of shows this is how long it's been in existence. And this top section up here is really about your marketing piece in the first place. And a little bit more with respect to that is we need to be careful what you communicate. So one of the things which many firms have done, and it's all about building up that customer base and looking for investments, is offering a freebie. Michael, you bring along your friend, introduce your friend, get them to open up a wallet and do an exchange, and hey, we'll give you X. It's only a small amount, but it's something, whatever that something is. And that's monetary or non-monetary benefits. Can't do it anymore. Not permitted under these regimes. And this is for registered firms. Got to make sure there's plenty of risk warnings. The FCA sent something out, I think it was during the first week. Just highlighting that they had already gone out to firms and identified a number of areas where there could be improvements. And one of those was the prominent placement of risk warnings. It's not a case of it's in the small font at the bottom of the web page. It has to be seen and nice and clear, bright colors and all the rest of it. And that's at the website side of things. If you are doing social media posts, then you have to have risk warnings that are readily in plain sight, and they have to take up, I'll say, quite a chunk of the space of that particular advert to make sure that it's prominent. So we've got other ones here, so let's have a look at these. So you go through that process and you've done everything. You're a registered firm, for argument's sake. You've gone through that process and you've got a new customer, or actually an existing customer, if you look pre the 8th of October. They must be given a personalized risk warning. So it's not a case of here's just a risk banner and there you go, which is what you'd put on your website. During this process, it must be Michael, or from this perspective, Diana. And there's prescribed wording that that customer must have. And that's all documented within the FCA template and a handbook as to what that wording should be. But it's addressed to the individual to make them pay more attention to it. And it links to a longer optional 2-minute read, 2 minutes-ish, read, which goes into more details in terms of the risks associated with crypto asset investments, things to be aware of, and also has within the context of that links to other FCA website pages, which gives more information. It's a knowledge type thing. Bear in mind, we're within a month of this going live. In 2-3 years' time, this will be normal day-to-day kind of place. It won't be that kind of, oh, hold on a second, what's all going on? Customers will be used to it. It's there, it's useful, and it's just sort of following through that. So all customers will have to go through that process once. So all of the existing customers that want to continue to invest in crypto assets that are on the books of a registered crypto asset firm, before they can go and buy anything else, they have to see that. What else do we have? We have a consumer categorization or self-categorization. And we have 3 options. The common one, or the one we expect to be the most common, will be a restricted investor. And there is a template, prescribed template. We can't pre-populate it. We can't tell the customers, you need to click here and you click here and click there, otherwise it's not going to work. They have to go through that process themselves. And they all have to be as prominent as one another. And again, it's a positive friction. The expectation is the customer is familiar enough to understand whether they are a restricted investor. And that really means that they will not spend more than 10% of their income in that type of investment. And they will declare that themselves. I'm not going to do it. And I didn't do it last year. That's really what that's referring to. So we've got the restricted investor, we've got a high net worth investor, or we've got the one which I always get tongue-tied on, which is the certified sophisticated investor. Couldn't say that very quickly many times. We don't expect to see that last one very often at the moment, because who's in a position to actually do the certification? So is there a firm out there that's willing to say, hey, this customer really knows what they're talking about, they're sophisticated, they can go off and do whatever they want. But in due course, say 2-3 years time, that's going to become maybe more of a thing. We'll get a flavour of that in terms of developments in over the years. And that self-categorization process has to be done on at least an annual basis. Customers' situations change, so it's trying to make sure that it's the relevant categorization that they've applied to themselves. We also have a test. Yay, don't we all love tests? And it's called appropriateness assessment. Well, that's what we've called it. It's kind of terminology that gets used within the FCA's guidance and policy statements. But it's verifying that that customer has a baseline knowledge of the risks that are involved in buying crypto. But it's also looking at the firm themselves and understanding who they're getting involved with. If you want to know what those questions are, specific questions, 12 question types, then you could have a look at FCA COBS, which is COBS 10 Annex, and that'll actually list them all and go in a bit more detail as to what they're looking at. Now, in terms of the assessment, you can't make it obvious as to what the answer is. Very enticing, as it were, to give an option of, say, 3 or 4 options and have one that just is so obvious because the other 3 aren't. Can't do that. They all have to be reasonable. They all should be roughly around the same length. You should try and stay away from binary or too many binary answers to try and ensure that it's a sensible assessment, and it actually adds value to the process. How you actually conduct that assessment and how you deal with the output from that assessment is based on a case-by-case firm basis, what works best for them. But the focus really should be on the firms to do the education and make sure that the customer is knowledgeable before they go and do these assessments. And that, again, is something that needs to be done annually. And I would also point out that the FCA expects you to limit how many assessments a customer could do, because if they can't get it right, if they can't get, if you as a firm, you don't think that customer did well enough in 1, 2, 3 assessments, then is that investment is actually buying crypto the right thing for that customer? So it should be limited in terms of where we go. And the other bit is a cooling off period. Yay. So the process, where these actions really take place would normally be through an onboarding process. So we're bringing on a customer. You've got a new customer, they've seen an advert, they've seen your website, go, oh, we're quite interested in that. Well, I wouldn't mind getting involved in crypto. So let's onboard. So we go through that process. You're covering those aspects off, plus you're doing your typical KYC and things. And once all that ticked off, everything's good to go, so long as it's taken more than 24 hours. Can't take less. And it should be quite clear, or made quite clear to the customer, that even if they've gone through all those processes, they don't have to buy and invest in crypto assets at that point. They can walk away should they want to. Should be balanced between that. So you can see there's a lot of really, it's called positive frictions by the FCA, but they're definitely frictions, whichever way you want to look at it, in terms of the process. And if someone goes through all of those and they still want to invest in crypto assets, then yay, we're good to go, subject to the usual AML checks, ongoing AML checks that you're going to apply through the process. So now we've gone through that. Hopefully that's given you a good view as to all of the moving parts for what financial promotion regime is about. Let's have a quick kind of reflection on terms of the impact on crypto asset firms, since that's kind of why we're here. What I'd like to do first is actually look at, and I just realized there I haven't actually put the source on that, but that table comes from another FCA document. It was the consultation paper in 2022, so it'll be CP 22/2, which is one of the really early ones looking at financial promotions. And you look at that figure, and it's like the expectation for firms to get themselves ready for the crypto asset, or for the financial promotions regime within the crypto asset space, was in excess of 40 million. Pre-inflation days, because this was written back in 2022. But that was to get the infrastructure right, the governance processes right, in terms of making sure all the risk warnings are in place, and the whole sign-off processes that need to be in place as well. And by the way, you actually need to review everything on a 3-monthly basis at least. So there's a lot of work on an ongoing basis involved in this. But it was also to deal with the IT system changes that may be put in place to deal with the categorization piece, the appropriateness assessment, and that kind of whole onboarding aspect as well. So it's a lot. The ongoing costs were left unquantified at that point, but I guess it depends on how well the IT systems have been built through the course of that. Governance, to be fair, shouldn't change. You're just making sure that you're reacting to any strategic change within your business model to make sure that your approach to financial promotions remains the right approach. Overall, though, it wasn't designed to be a cheap piece. And when you're looking at an environment where we're still going through sort of a quiet period within the crypto space, and we're going through a period where this, high rates of inflation throughout most of the world, it starts to kind of add up. It's a lot of money to get involved in that. So that's one impact. It's going to cost to get it right, assuming that you can get yourself in a place to be able to meet all of the other requirements. From a registered firm's perspective, it's still going to cost a lot of money. But there are other impacts if you choose not to go down that route. And it's worth looking at that other side of things. So it can impact on your supply chain if you don't get it right, or if you choose that you're just going to ignore it. We'll come more onto the options, but if you choose to ignore it, then the FCA will start putting the foot down. They'll be reaching out to social media platforms and saying, can you get those down? They'll be reaching out to regulators in other jurisdictions that perhaps you're already registered with to go, they're in breach of the law because of the extra sort of judicial stretch that they have. They'll be reaching out to the app stores where you place your apps and preventing them or advising them, we'll say very strongly, not to put them on. And they'll also be looking at your payment firms that are giving you that on-off ramp from a UK perspective, whether it's cards, whether it's e-money, whether it's banks, whatever it happens to be. And those firms themselves need to watch what they're doing, because they could actually end up committing an offence themselves, and that so it's meaningful to them to actually go, sorry, unregistered firms, we can't deal with you. Influencers need to watch what they're doing, because if they haven't had their material approved, then they're in breach of financial promotions rules. Getting an idea how far stretching this regime actually is. And a nice one that I put on the bottom there, even sharing a post that has a financial promotion in it can essentially, potentially, be considered a breach of the financial promotions. So it's about firm representations as well within that context. So there are some real challenges going on for firms at the minute. Now, these slides, I'm going to say, well, this slide is maybe a little bit dated. I think certain things have moved on, but at the time, it still gives a picture, I think, and it's still worthwhile looking at. PayPal made a decision before the 8th of October that they were going to pause crypto purchasing in the UK, so they could figure out actually what was going to do, how they were going to deal with it. Luno to halt some UK clients from investing. So people stepping in going, yeah, what's going on? Let's step back a second. Something a little bit more recent, the FCA immediately issued 146 alerts to firms, to crypto asset firms, for essentially breaching the financial promotions regime. Now, I consider that to be relatively low-hanging fruit firms. They were likely are still in discussions with many other firms. That 146 has gone up. So there's a lot going on. The FCA are doing what they said they would do, and they're actually policing this. There was the FCA imposed restrictions on rebuildingsociety.com Limited. Now, they were an S21 firm trying to provide support to Binance in terms of delivering a compliant solution. The FCA didn't like it. The ins and outs, that's not what we're here to discuss. That's what we're seeing. There is plenty of other movement. We're going to see plenty more movement in the coming months, I guess. And the FCA won't stand still in terms of guidance as well. I haven't read it, so please don't ask me any questions on it, because I don't know all of the ins and outs in it. I saw that they released final guidance in relation to how to some of the other aspects of financial promotions, which has been, I suppose, in demand by the industry in terms of having that kind of finalised kind of piece. But I'm sure we'll see more. We'll get more notes, publications on their website to highlight the fact that they've reached out to firms to try and improve that quality. And to be fair to the FCA, from our perspective, we are a registered firm, and the engagement for the FCA has been very, very good, very, very supportive in terms of how we've interacted with them. Everyone has their own view on that, I'm sure, but they are not just going at us, they're going at the crypto industry with the stick, but they have also tried to do some of the carrot as well. So these are the challenges for unregistered firms we've seen that have come to the fore. There are a lot of firms that potentially are in a place going, well, we still don't really know what we're doing, and have taken some form of action and sort of taken one of the options that they believe is available to them. So let's look at what those options actually are. Up in the top right, there's just a link there to a letter that we received as a registered firm. It's been called out in many other places as well, but who can actually do promotions? So you're either an authorized firm in your own right, you have approached an authorized firm, and that authorized firm has approved your material, which is the S21. We'll come on to that in a little bit more information, or essentially your crypto asset registered business like Zumo. The fourth one, I basically ignore the fourth one because everybody falls into the top three or doesn't fall into any of them as far as I can see. So to me, there's 4 clear options based on that alone. You can ignore it if you're an unregistered firm outside the UK, and you can run the risk of something happening. Now, the FCA will talk about penalties, they'll talk about imprisonment, but reality, they'll cut down your supply chains, they'll cut down your marketing options, they'll cut down, or they'll potentially reach out to regulators in the other jurisdictions and put pressure on to do something about it, and ask, cut you off from being able to do anything from the UK. Another option, okay, not great, is you just go, don't like any of this, and I'm sure there are firms out there. Look, the simplest thing to do until we can understand what's going on is we'll just step back. We're just going to not entertain being in the UK for the time being. We'll withdraw. Customers that are UK at the moment, they'll have to go elsewhere. You're losing revenue. The FCA's favourite, for obvious reasons, but looking at the figures that the FCA's published, there still hasn't been a big take-up of it. And how long does it take to go through this? But is to actually register with the FCA in the first place. And I reflect back to the first round of registration and how many firms withdrew their applications. Have those firms actually changed their governance models? Are they in a stronger position now to apply for registration? Is it within their strategy to actually find a location in their workforce or base themselves in the UK for the UK market? Do they have the costs, or do they have the funds to meet the costs and that sort of time delay that's going to go through that registration piece? But it's a genuine way that you can get yourself back into the UK, the market. The other market, which is called out in publications and things, and was actually a bit of it was a last minute kind of last gasp option, in a sense, that this became available, was the S21 support. So an approved firm actually signing off and approving an unregistered firm's crypto asset marketing material and financial promotions material. But that itself has issues. The authorized firm, they are authorized and regulated by the FCA. That's what we're talking about here. They have to carry out due diligence on that unregistered firm to the level as if the unregistered firm was also authorized and regulated. So aspects such as consumer duty comes into play. It has to be, are these offerings fair for the customer? There's a lot more questions to be asked. Now, obviously, we should be thinking about that anyway, but it becomes, and as part of an assessment from a due diligence piece, that S21 has to apply on a crypto asset firm. So jumping down to that third one there, does the S21 actually have a risk appetite to work with your firm in the first place? And if they do, then it's an option. If you look at the number of firms available at the moment, you could, in due course, look at a potential conflict of interest occurring. Maybe, maybe not. In terms of whose financial promotions are reviewed first. Do they have the resource to just deal with everybody at the same time? Or is the preferential given for the ones that pay the most money, etc.? And are you in that position and all the rest of it? So there's different bits and bobs that need to be considered. But they're the ones that generally get spoken about. But we think we have another option as well. Again, it's there on the table. Part of the kind of S21 kind of concession, as it were, was that crypto asset businesses that are registered don't need to be an S21 firm. They can authorize their own and approve their own crypto asset financial promotions, and that's key. It's their own financial promotion assets. So from a Zumo perspective, what we're looking at is potential partnerships. We'd love to talk to more firms on this. We're already talking to some, but to talk to more that are in that space of either withdrawing from the market or, let's say, currently ignoring it, or even going through the early stages of the registration piece. We could potentially provide a revenue stream during that period, albeit the expectation is the customers will be Zumo's customers, but you'll have a revenue share on the back of it. And it gives you the peace of mind that if we, to get the right shape that's right for your firm, then it'll give you peace of mind that actually, yeah, we've still got something coming from the UK. And you can go and you can look at that FCA register at a later date when it's the right time for you. Or you can reach out to an S21 firm at the right time, or as I say, at the same time. But it gives breathing space to get to take that move and to look forward. So I hope that's been quite insightful for you and useful, just to sort of give that. Like I said, we'd love to talk to more firms from that perspective. You go and have a look at our website and there'll be links there, or you can reach out to me directly, or through sort of Diana, as it were, if you need contact details, and we'll sort of take that further forward. So I just really want to finish now and open the floor for those questions, if anybody has them, any to sort of point my direction.
Wonderful. Thank you so much, Michael. We really appreciate the way you shared your insights about the FCA's financial promotions regime and why it's so relevant today for firms and what's going on. You really unpacked it in such a meaningful way. Again, I'm Diana. I'm head of research and sustainability at GBBC, and I'm going to take some questions. So to get started with you, how do you think, Michael, that the FCA's new financial regime differs from the previous regulations in place? And what are the primary implications of these changes for businesses operating in the UK in terms of what they have to adapt to?
In the UK, okay. Well, assuming that we're talking about crypto asset firms that have a registration, then it's those positive frictions that I mentioned. It's having that governance model at the outset to make sure that your marketing material, your website, social media posts are all fit for purpose and don't trigger a financial promotion unintentionally in a way that would be inappropriate. Lack of risk warnings being a view there of inappropriate, and it's having that journey in place to have that personalized risk warning, to have that categorization for the customer, that process, the appropriateness assessment, how you actually deal with all of that, and just as important and not to be forgotten about is that 24-hour cooling off period within that. They are the key pieces of the puzzle that a firm within the UK needs to make sure that they get right. The FCA will no doubt be looking at this space and monitoring it. I reflect back to the P2P market, and you can see that since they went fully live at the beginning of this year, there's already been 2 reviews. There's one really early one, which was looking at websites and placements, and now more recently they've actually done a wider review of the categorization and the appropriateness assessment. The FCA will do exactly the same in the crypto asset space. We need to learn what's going on in other spaces as well. The difficulty is we don't know what's. I'll caveat that. It looks as though if you were to go to P2P sites and have a look, it's difficult to see whether they have reacted to the FCA's requirements and whether it's a good site or not a good site, and a good experience or not a good experience. But the FCA has set out some good and poor practices that crypto asset firms can learn from and try and address now, rather than wait until the FCA is knocking on the door.
Right. And the approach that Zumo has come up with and the support that Zumo can provide to its ecosystem, I'm sure is going to be very valuable moving forward. My next question is, how do the UK's regulations compare to similar financial promotion regimes in other countries?
Now, that's a question which my focus is on the UK. So we don't, we aren't focused on providing sort of externally beyond the UK. You know, if you look at the movement from MiCA within Europe and choose other jurisdictions as well, the crypto asset regulations are in constant transition and movement at different stages. So you really have to look at your client base, your customer sort of profiles. If you want to operate with and interact with UK customer base, then you need to meet these requirements. If you go elsewhere, then you need to meet the requirements of sort of the relevant regulations in that space as well.
All right, that makes sense. What challenges then do you anticipate that businesses might face in adapting to this new regime? You've mentioned
Again,
costs, you've mentioned fees. That's pretty that's a pretty big deal.
it's a lot of money, you know, and it depends on how you want to take it forward. So if you want to go down the S21 route, and the S21 route can support in some aspects of that, then you're not dealing with some of the technical stuff in-house, but you'll pay a lot of money for somebody else to do it, because that S21 approving firm is accountable for all of your financial promotions. So they really, really, really need to make sure that they get it right. They need to make sure that they've done the proper due diligence on the unregistered firm in the first place and are happy to take on that action and make sure the likes of the consumer duty aspect has all been covered off. So that's one bit. If you look at the registration piece, you've got costs associated with going through registration, legal advice, you've got all the sort of applications to pieces to go through, and fulfilling all the relevant requirements from day dot. So there's a lot of costs. There really is a lot of costs that need to be borne by that, and it's ongoing. And that to me is one of the key things. You'll have a technical solution that should hopefully, if once it's built, should last a long time. It's really early. The likelihood is you're still going to want to tweak it from time to time, so there'll be a small cost for that. But there's the overriding governance, the market, the sort of governance of the financial promotions that need to be done, the regular reviews, and that depends also in terms of what products and services that you're actually offering. So more complex the product and services, then potentially the more levels of risks, risk summaries that need to be provided, so that you're giving the customer the right information for the right service at the right time.
Exactly. So important. Can you provide examples of business models that you think align well with the new regulatory standards?
Well, I'd look at our approach. You mentioned at the beginning we're looking from a sort of business to business type aspect, but in reality, we also have within Zumo Financial Services a retail book that we operate. So it's a use case for us to actually build models and ensure we understand the sort of the compliance aspects for the retail space. So within Zumo app, we've built our model that we're very comfortable that is meeting the requirements of the FCA in terms of those friction points and that journey for customers that are onboarding with us. And to hasten to add, the pre-existing customers that we had or have also of going through those process before they can invest further in crypto as well.
Now, related to a comment that we got in the chat, my next question would be, and thank you so much. You're so insightful in bringing light to a lot of this issue, but how can businesses effectively communicate the changes that they have to make to their stakeholders and customers? And precisely, would you consider it a buyer beware strategy?
Right, businesses to their stakeholders. Again, assuming the strategy is that they want to be in the UK and they're going down that route, then it's literally, you go through that process of looking. If you're doing it on, in-house, you need to understand the policies, you need to understand the guidance that's out there from the FCA. You need to fully understand how that actually applies to all of the moving parts of your organization, and work with your product teams, work with your marketing teams so that they fully are on board with what actually needs to happen. And that's even before you're then talking about going to board, and the board then having that conversation with stakeholders and say, look, we want to be in the UK. It's our strategy. It's our strategy. It's going to cost X amount because, hey, these are the options available to us. We can do registration. We can do an S21. We can work with Zumo. It's going to cost money. Hey, we've done our research. We've done our homework. This is the type of money that that we're actually needing to raise to be able to get into the UK and have some form of placement within the UK. I think that answered the question. Was there a second part to that question I didn't touch on, Diana, or was that sufficient?
It was basically if you would consider this a buyer beware strategy.
A buyer beware one. So I guess that kind of falls into the approach where that withdraw option, that withdraw strategy. You can't avoid it. So, but if you have website in a different jurisdiction, then it really, really needs to be clear on there that you either block it from UK for UK customers. There'll be ways around getting that, VPNs and what have you, or you make it clear on your website that we can't service UK retail customers because of the financial promotions regime. We are unable to do so, type idea, and make it perfectly clear. And that's on the website, but it's also feasibly potentially on some of the social media posts as well, because it's that outreach, that point. And the FCA talks about significant steps. I love that phrase, significant steps. If you have a social media post that then links to a website that then does something else, and it's 3 or 4 steps down the line before it goes, hey, you're from the UK, tough, type idea. Well, if they were significant steps one to the other, then potentially that first one is actually, that's where the warning should have been, and not just at that back end in the first place. So it's where's the right place? Where do you start with significant steps? It is a bit of a balancing act, and I get that. And it's for each firm to kind of make that justification, record that justification, so that if ever they're challenged, it's a logical justification for their business. And even if someone disagrees with it, then look, we went through that process of having that conversation for that particular financial promotion, for that social media post, and we determined that it wasn't appropriate, type idea. So that would be kind of my placement on that.
Yeah, makes sense. And building on that, if you consider new startups and new entrants into the space, what would you advise for them to make sure that they start with the right foot forward with respect to the new regulatory requirements?
Well, there's a good one. We'd love to have a conversation with firms who would consider themselves wanting to come into the space and see whether potentially, rather than going it alone, they put a foothold in there with us, and get a view as to whether there's enough volume within the sort of their customer profiles that they're wanting to attract. There's one option, but there's a lot of information the FCA provides in terms of that registration process. That to me would be the sensible approach to look ultimately going down a registration process, yes, you're going to have to make sure you've got the travel rule right to meet the UK standards. You're going to have to make sure you've got financial promotion stuff in place. You also have obviously a lot of other aspects that need to be put in place as part of that application up front. But if you can show to the FCA that you're working on it, you're nearly there, you will be before you go live, then and we'll follow through. They do, again, I've got to be sort of frank with this and transparent with this. The conversations I have with the FCA are very, very open and transparent and two-way. Kudos to them for actually being so engaging through this process.
And final question that we have time for is, has Zumo introduced any new features or tools in response to the FCA's regulations, particularly when we think of disclosure and disclaimer strategies to provide transparency for investors to make informed decisions, or anything else that you would consider important?
We did what I suggested firms would need to do. We looked at our products and services that we have at the moment, and we've evaluated what we need to do in terms of the whole disclosures, the whole risk warning piece, to make sure that we are in a really, really strong place in terms of that kind of compliance. That's not to say if the FCA came along and said, would you mind tweaking this, please? Not that they would say, would you mind, but you're required to tweak this, that we wouldn't react to that and actually sort of follow their request. It's a learning curve for us as much as a learning curve for everyone else. We just believe we're in a really strong place to met those requirements. So have we looked at disclosures? Have we've taken the relevant actions that we believed we need to make sure that we were compliant.
Well, great. Well, thank you once again so much to Michael and Zumo for joining us today. It's been a very thoughtful and engaging presentation and Q&A on the FCA's financial promotions regime and really how to navigate it because it's so relevant today. We look forward to learning more about Zumo's progress, and a recording of this presentation will be circulated to all those who registered, and it will be shared publicly on GBBC's YouTube channel as well. Thank you so much and have a great rest of your day.